Right guys, we've got another video today. This one's going to be on journaling your trades. Now we're going to break it up into 3 segments of the video. So firstly, I'm going to be talking to anyone that's newer to trading, talking about why journaling is so important and will massively increase your profitability. Not only increase it, but it will also make you become profitable quicker. Part number 2, we're going to be talking about what I use to trade and how I want to do it. And part 3, we're going to be doing an example with you guys just so you can see it live, what I'm actually going through, what my thought processes are when I'm journaling, to make it a bit better and easier for you guys, because I know a lot of people watching this channel will probably be new traders, so all this journaling stuff is completely new to them. Anyway, so first up, I'm going to be talking about why journaling is so important, why I think it's important, a lot of other traders do, and the main reason is because you get a big database of all your trades. Now a lot of the prop firms are doing these by themselves, but it's all AI done. It's not as accurate, you can't actually see the trade, it just tells you certain things, which is obviously good, but it's nowhere near as advanced and specific as it needs to be. So journaling basically is just, you can do it how you want really, but you're going to be talking about the trade you took. You can add whatever sort of checklist you want and whatever description segments you want. I'll be going through mine obviously in a minute, but the reason it's so important is because you basically get to catch out mistakes early and see your strengths, see your weaknesses. For example, you could be trading at a certain time, you could be trading a certain setup that doesn't work well, and it basically allows you to try and better your understanding of either that time, that setup, or you can just cut it out. You can add new things into your strategy, checklists that basically cut out any of these things that you might be doing that make you lose trades. So obviously, for an example, like I said, I don't trade from 10:10 to 10:50 New York local time. I was looking through my journal and I was seeing that a lot of the trades I took at that time, mainly reversal trades, they weren't winning because it was a bad time. I realised that a reversal tends to happen before 10 or just after 10, so that one helped me save losing a lot of money. So anyway, yeah, another thing about it is basically people say about back testing and how important it is, and as much as I believe that it is important because it helps you come up with a strategy, you've got a load of data there at your disposal that you can basically use to find out what strategy works. You can refine it because it's so easy to just go back. It's not as easy as you think, it's not as quick as you think, it does take time, so you need to be wary and put effort into it. Don't just slack it and go through it, because it will affect your win rate, it will affect your strategy. And yeah, I just recommend doing it properly, setting aside a good amount of time and not brushing through it to try and get a 99% win rate strategy, because it will never work like that. But yeah, trading journals are really important because you've got that data. There's loads that you can add to it in order to really make it specific to you. And obviously live trading is a lot different to back testing because there's no emotion when you're back testing. When you're trading live and you've got real, even if it's stimulated money on a funded account, it's still affecting how much money you are actually going to be making as a trader. So there's emotion, there's psychology. You're also going to be trading different strategies, you're also going to be trading different times, so it really helps to nail down your strengths and weaknesses, and you can either build on them weaknesses or try and cut them out. But like I said, I use Notion for mine. It's free to use, I'll leave the link in the description. If not, just search it up yourself. But you're going to be greeted with this page once you sign in and make an account. Now what you need to do is go up here to create a new page. I'm just going to quickly show you my journal in full. This is the one. So I've got the title, I've got my trading rules. Don't worry guys, I'm going to be showing you how to make this all myself. Just get rid of that spelling mistake. So yeah, as you can see, we've got a bunch of factors here. It's all neat, it's all nice and easy to understand. For example, go on to this trade. You've got your pictures that you can add to it. It just helps because obviously you're not going to be able to remember the trade and understand what I'm talking about just from writing. So as you can see, we've got some here. But yeah, we're going to go through, show you how to make a new one now. So obviously when you come here, you want to create a new page, or do trading journal tutorial. So we've got the title. If you press enter, you can get a description. So I just put my trading rules in here. You can put whatever you want in here. This ain't the important part. And then we're going to want to add a, let's get rid of that. So now you can see this little click to add below. So we're going to add a table. Scroll down a bit. Should be somewhere here. There you go. So here we go, we've got a table. We can probably drag this wider somehow. I don't actually know how. I don't know how I did it on my other one, but nonetheless, let's go into it. So table, whatever. So we're going to make a new, you want to go to new here. It's a new page. I put the date up here, so 17 November, for example. So then we've got this tag section here, as you can see. This is where we're going to be adding all of the little checklists and segments of the journal. So obviously I'll do a couple for an example, and then I'll just show you mine so it's easier and quicker. So you've got, as you can see here, you've got multi-select, select, number, text, you've got loads of stuff. So text I'd use for, you know, let's say what went well, or you can do, you can even, I also do, you know, obviously my analysis. Sorry, I'm struggling at the moment with doing these videos. I'm struggling to do it all, stay focused, writing it all down. I'm trying not to take too long on the videos because this one's gone 7 minutes already. I'm trying to keep this one under 20 minutes. But yeah, all this stuff, you can do selects, you can do asset class, and then add option, NAS, ES, and yeah, so you get the idea. You'll be able to do these all yourself, obviously, and the template that I'm going to show you now, you don't have to stick to that. You can add or remove ones that you think that aren't necessary, or if there's anything else that you'd like to add that you feel is important to your trading. We're going to go down to here, and as you can see already, just from 6th of November to the 14th, all this data, and the main one that I find important is mistakes, improvements, not moving stop too soon, maybe not partialing as quickly. There was a time when I was partialing too early, and I didn't realise, obviously realised when I was trading, I thought missed out, sort of, oh, it's gone up to my take profit, but then I was realising these trades that I'm winning, I'm partialing too early, and therefore that's ruining my risk to reward, and that basically puts my profitability down. And then since then I held my trades, I held it past, you know, a bit of liquidity. I took it at minimum 2 to 1, and that's helped me improve, you know, having bigger winners, because when you get winning trades, you want to sort of squeeze the life out of them, and you want to get the most out of them that you can, because they're the ones that make the money, and they're going to be able to mean that when you do lose trades, you're not losing as much capital, when you've got a bit more to play with, which always makes it easier. But anyway, so let's go to new. I'm going to be doing my example for today. So today's the 27th November, date of trade November the 27th, and then I like to put end date and include time here. I'm just going to load up Top Step, and just so I can get the times of the trade. It's obviously on my other screen, but I think it was 10:02, and then it would have been like 10:08, so let's just leave that for now. Asset class was NASDAQ, buy, sell was a buy, profit and loss. So these are all easy things. Minus 177.5, winner loss, risk to reward ratio was 7.29. I'll just go back and fill in the time. 10:02, 10:10. So yeah, these factors, these just help, you know, like I said, when I was trading at a bad time, this helped me understand, because I could easily see I was losing trades, and you can sort of find correlations in your wins and your losses quite quickly just by scanning through. Confidence, I'm going to say I had a high confidence going into the trade. Expected rules I did. Entry time was 10. Right, so I added this in again just so that I could see further down the chart. So bias with reasoning. So for today, bullish bias because price made a Judas swing down with S&T, and I had anticipated a bullish week. Yeah, so that's literally all I put. Some people will put more, some people will put less. Dual liquidity, current, and previous day highs. Really easy, really quick. I find it better to do it as soon as you can after you've taken the trade, just because there'll be things that you forget. Even if you do it on the evening after the trade, there'll be things that you forget because it's not fresh in your mind, and it might not seem like much, but that little thing that you remember might be important, might be an important thing that you learnt today that by the next day you forgot. That's just me anyway. Some people might have a better memory. Liquidity sweep, Asia and London lows. Entry model, mine was a 9:30 AMD model. Trade analysis, so you can go here. I'll just use snipping tool to get mine. 27 November 1. I like to do 3 pictures, so a higher time frame one, a lower time frame one, and then also I do a risk to reward one, just so when it loads I'll show you. Shows my execution, that candle there. Obviously it wasn't a very good trade, as you can see. Yeah, so I have that one with the risk to reward. This one don't have it on because it got in the way of the executions, but I remembered it. Then I have a higher time frame one, which is this. So obviously, as you can see, it took Asia and London lows, took previous day low as well, and well, I believe no, it didn't actually. But yeah, obviously higher time for stuff like this S&T. Also, don't just put stuff supporting your trade. I know I have a little bit here, but I try not to. I've put this fair value gap in because I can see that, you know, in reality we've come up, and it's just this segment is the reversal. We've traded up into the hourly BISI perfectly, and then rejected off of it. Body's respecting really well, and then I do another one with some close-up analysis so I can see everything I'm seeing. So here, this trade is obviously at 10:02, so 10 AM power 3. Also could have been, I think it would have been the silver bullet. So I'm going to change that. I've got macro written just so I can see that I've taken the trade in macro. I can see the buy side I'm aiming for, hourly fair value gap. It's always nice to reference a higher time frame PD array into a lower time frame chart, because as you can see at this time, this was 9:55, so this meant that the hourly candle filled it in fully, rejected off, and this to me was just, you know, another liquidity sweep, stop out any early buyers and induce more sellers in here. It looked really good. This candle looked really good. We had this 1 minute fair value gap, but once it started consolidating here, I should have known and taken it off. Anyway, I don't want to go too deep into that. So they're the 3 that I mainly use. Sometimes if there's more to show, you can add more. So I'm going to put after not much movement, pre-New York session, anticipated bullish bias for the week and expected P-Day has to be taken. The market moved down, in which I thought was a manipulation. and the setup formed nicely at a good time. However, this was obviously a retracement as the drawn liquidity was previous day low. So that's basically what I just put. Just a bit of analysis for the day and what happened, why you thought it was going to go away. I've put market move down, in which I thought was a manipulation, and then I put that it's wrong. It obviously was wrong, drawn liquidity. Success is what I will. I'm going to put entry technique and risked well. So trading at a good time of the day, not being afraid to get in. Now obviously this is a losing trade, this is why I also did it as well, because it's a good example. Journaling your losses are more important, because when you're doing winning trades, you're obviously doing something right. A lot of people like to just trade their winning trades. I'm like it as well. Some days when I lose, if I lose 2, I might just put the 1 in, or if I lose a silly one, but it's crucial. And I mean, I don't do it every time, but that's a discipline thing. It's crucial to do the losses, because they're what you can learn from more than your wins. And also, just because it is a loss, this was my point, just because it is a loss doesn't mean that you shouldn't be putting in what you did well as well. Just because, you know, this trade for me, it was a good setup. I would take it again, so I put high confidence. It all looked really good, but obviously the only thing wrong was my draw liquidity, and the fact that when we went into the fair value gap, we didn't displace through it, which is obviously a key sign, not being afraid to get in. So mistakes, improvements, I'm going to say needs to be more open about my bias, as although the setup was A plus, although the setup was A plus, it was my draw on liquidity that was incorrect. I also could have mitigated the loss when price consolidated in a bearish FG. So these are all little things. You know, there's a lot of times where I've traded and it's gone up, and it starts to consolidate in a fair value gap, or it starts to reverse off it. And sometimes, personally, some people don't like doing it. Some people say, look, I've set my stop loss, I'm going to take it there. It's either going to hit take profit or stop loss. But I think that is good. It's more for beginner trades personally, because I feel like you have to build trust in your trade, build discipline, you know, patience, not taking it off, not worrying about the money. But for me personally, I like to think I'm a bit more advanced, and I think that knowing when to take your trade off helps you mitigate your losses, because obviously it could go up and you should be holding winning trades. But if, for example, SMT, if an SMT forms at the highs, ES takes it, and Nasdaq, which you're trading on, doesn't, and it starts to reverse, you should probably get out that trade. You're still in profit. Here on this trade, as you can see, I'll show you, price consolidated. This was a 1 minute. These candles only just inversing it. I could have got out here, would have been in profit. Instead, I let it drop all the way down here. I should have got out around here. I was going to get out, but then I didn't, because I thought, let's hold it. But realistically, if you do a trade and then extra evidence comes to you after you put the trade on that it probably won't win, I think it's a wise idea to take it off. That's just my personal opinion. Some people think different, and I understand why they do. But yeah, so there we go. We can see it here. All the stuff is filled in. I'll take a screenshot of that actually, and then you can all use this. These are the ones I use, and you can see what type they are as well. I suppose you can see this, and obviously just marry this up with your other screen, write it all down, and hopefully if you guys have any questions, obviously I'm a small channel, so I will be replying to everyone, so make sure to just message me. I can give you any tips or anything, any questions you have. But thank you for recording, thank you for watching this video. I'm going to try and get better on shortening the time, because this is 20 minutes. A lot of people don't want to wait 20 minutes to watch a journaling video. But yeah, if you enjoyed it, make sure to leave a like, subscribe, and also if you've got any friends looking to trade, starting to trade, or even if they have been trading for a bit, I want to make a community full of traders so that everyone's basically got somewhere they can go to ask questions if they're struggling, because obviously you can speak to anyone about something not going well, but you'd rather speak to someone, or me personally, I'd rather speak to someone that has actually traded, because then they know specifically better what you're going through. But yeah, again, I'm rambling on, but hopefully you enjoyed it, and I'll see you in the next one.